Hey, what's up there for the third time here? Let's get into this premium content. So, first things first, we'll pull in EBIXQ, and not a lot happening here. They're just waiting for the bankruptcy, right? So, remember where our cost base is $5. We're just holding, no big deal, but that is on our spreadsheet, right? Next thing down the list is Hawaiian Electric, so we'll just do that and go through that. We had the 1350. Let's type it in. A little burnt today if you can't tell, but that's all right. 1350, we closed them just under, so I will get assigned 100 shares for 1350. 1350. Beauty is my main position is several hundred shares, so I've already got an order in, and we're only like 7 cents away or something. So it's possible I could sell this in the after hours before I officially get assigned. But it's all good. That's the first assignment that we have since we got back in. And we're using all these to lower the cost basis. So I did sell another one today for next week. Ain't scared. But we did it for the $13 strike. So as the price of the stock continues to fall, we increase our security by lowering the strike price. And looks like I got 34 bucks per contract. Let's see if I can do this right. Oh my God, it's Papaw's calculator. Let's see if it'll actually work. All right, here we go. So we got 13. We collected what? $43, $34. And we're risking 13. So you can see 2.6% for 1 week. So if you do times 50, I'll take that return all day, every day, and I got high conviction in the stock, so we're good to go. Next thing next is Pfizer. We had the 2750. And you can see here we got assigned here as well. So this position is starting to get very large again. As you can see, we have all of these starting to pile up. I did sell another one for the following week, but this will likely be my last one. If it looks like it's going to get assigned to me, I'll lay off a little bit. But let's check it out. We did get a lower strike, so we're at the 27 now, and was able to collect 44 per contract for the 27. So 44 into 27, 1.6% returns times 50 weeks. Damn good. I'll take it every time. Some things that I'm thinking about too. While I was trying to decide this morning if I was going to take another one here on Pfizer, is that we have the 30, we have the sideways, right? So if it breaks this levels here, I will likely wait a week or two and let things start to go sideways again. So right now everything's cool. The 200's catching up. Everything's fine. So full speed ahead. MPW is the last one. We had the, I don't even know, 350, I think, which if you recall from the last video, we already were in the money a little bit. So we did get assigned on this one as well. 350, yeah, but we collected the extra premium up front. I did go ahead and sell one more. Lower strike price. Able to collect $10 per contract, which you're like, wait a minute, that ain't very much. But the strike is only the $3 strike. Oh, that was cute. So when you do that one, you can see the power of selling options because $10 into a $3 strike is 3% for the week, 50 weeks a year. There you go. 2.5 times your money in 1 year. So I think it's worth the risk. Again, here on MPW, I judged it just the same way. We have the 30 spike here, right? But we are still going sideways. We break this price level, I'm likely going to let it have some time. But so far, everything looks good. It's putting in at least a short-term bottom. And you can see that I've got all the orders in to sell the stuff right back. But nobody really knows what's going to happen. And that's the power of selling the options. Because if nobody knows and you can collect and be right sometimes, that is your market edge. So you can see that I'm using a guarantee to go along with some of the other strategies. So as the market starts going flat or sideways, we'll likely just collect some free premium and have more money for when the market goes down to swing trade. So hope this makes sense to you. Hopefully it's helpful. If you're selling options, let me know what you got down below, and maybe you can turn me on to something. But next week is the bewitching expiration week, they call it, or whatever. It's just the third expire of the month. So some of these other positions I'm holding that I'm trying to swing trade out of, I may sell options on those. I'm definitely going to look at them, but I do not want to hold an option more than a week because the highest premium is right before the expiration, and I think stocks are more predictable in the short term than they are long term. Anything can kind of happen, and I just want to collect the most premium, so I need to be shorter to expire. So hopefully that makes a little sense to you. But yeah, let me know if you're doing anything down below selling options, and I'd love to see what you're into. Remember, you got to make your own decisions. Don't just follow me. But you can see hopefully over long periods of time how even if I get stuck with a stock or whatever, we get out break even and just keep collecting premium. So even in this ugly downtrend of a stock we got on the screen here, it can still work. And even on EBIX, I think you'll be surprised to know that even if it takes a little while to get out break even, we collected 70% already. So even 70% a year is a good return. So we can outpace the returns safely, and we can calculate our exact risk, and it's all good. So hope y'all have a good weekend, and we'll try again next week.